Welcome back to the Noob Selling Options channel, everyone. I am incredibly hyped for today's explainer because honestly, we've got an absolute monster of a session lined up for you. We're going to be diving deep into some massive portfolio milestones we just hit, prepping for a seriously volatile upcoming earnings week, and then we're going to wrap things up with a pretty sobering real-world lesson on risk and leverage that you absolutely can't afford to miss. So grab your notes, get comfortable, because we have a lot to cover.
All right, here is our quick roadmap for today. We're going to kick things off celebrating our Week 6 all-time highs. Then we'll break down our Week 7 pivot as the wheel turns. After that, we'll map out next week's explosive earnings slate. And finally, we'll finish up with that chilling cautionary tale on leverage.
So let's jump right into part 1, Week 6 all-time highs raking in the premium. Because guys, we started off with an absolute banger of a week. Boom. Just look at that number, 4,552. That is our total profit for Week 6, which officially marks an all-time high weekly gain for the channel. This is exactly what disciplined premium collection looks like when every single piece of the puzzle clicks into place. But, how did we actually build that massive number? Well, it really comes down to the sheer consistency of our trading log. Out of 30 distinct entries, 27 were profitable. That is an exceptional 90% win rate. And it wasn't just about magically picking winners, it was all about expert trade management. We actually took a couple of hits on AMD and Now, but we efficiently neutralized those losses by offsetting them with winning strikes on those exact same tickers. Keeping our losers strictly contained is essentially the secret sauce to maintaining a win rate like this. And if we break down the profit by strategy, you can see we were heavily weighted towards sell puts, bringing in $2,381. A massive driver of this was our NBIS put, which generated over $1,400 in premium all by itself. Though it did ultimately result in assignment, we also closed positions for about $1,200 in profit and sold calls for just under $1,000. But what's also super amazing here, kind of hiding behind these top-level numbers, is our incredibly profitable sweep across the crypto ecosystem. Between IBIT, BSOL, IRIN, and Coin, we captured over $800 in profit with literally zero losses in that sector, just flawless execution all around. Okay, moving seamlessly into Week 7, the wheel turns. This is where we get to see the actual real-time mechanics of the wheel strategy in motion, monetizing those shares we just picked up. The crucial takeaway here is how our market posture just completely flipped from one week to the next. Back in Week 6, we were super put heavy, right? Over 52% of our profit came from cash-secured puts. But as soon as we took assignment on stocks like NBIS, we instantly pivoted. Week 7 suddenly became incredibly call-heavy, with nearly 80% of our premium coming from aggressively selling covered calls to monetize those newly acquired shares. This kind of adaptability is literally everything in this game. Looking directly at our Week 7 entries, which brought in $2,488, by the way, just notice the textbook execution on NBIS. We took assignment at a 197.5 strike in Week 6, and we instantly turned around and deployed a covered call at 207.5 in Week 7. That one strategic move alone scooped up a hefty $704 in premium, while also perfectly positioning us for capital appreciation if the shares get called away. Plus, every single log transaction here represents positive cash inflow. We're talking 100% premium capture across 11 different contracts with zero realized losses. The wheel strategy is doing exactly what it was built to do. All right, let's fast forward a bit and see how this builds into our playbook for next week. Section 3, Earnings, Volatility Ahead. August 3rd through the 7th is a massive earnings gauntlet for our specific portfolio holdings. So here is the exact schedule and the option implied expected move range for the heavy hitters we're tracking. Palantir, SPCX, Uber, and Circle. Palantir kicks us off on Monday after the bell with a massive 11.6% implied swing. SPCX follows up Tuesday post-market, pricing in an 8 to 12% move. Then Wednesday morning is a wild doubleheader, with Uber bracing for a 7.1% move and Circle pricing in a full 10% swing. These are hefty expected moves, which means market volatility is going to be extremely high. Strategically, we have to be hyper-aware of how our options are going to behave around these events. For Palantir, there's a huge implied volatility expansion baked in right now. That means if you're holding short calls or puts, you've really got to watch out for the brutal IV crush. That rapid drop in option prices when the uncertainty vanishes right after the announcement. For SpaceX, the market is laser-focused on their cash flow and whether they can maintain prices 30% above their IPO. Circle has historically high realized volatility anyway, so definitely keep an eye on their USDC circulation growth. But for us, the most critical one is Uber. We are holding a buy call on Uber, which means we strictly need the underlying stock to violently rip past that 7.1% implied move just to overcome the post-earnings IV crush. If it moves any less than that, the shrinking volatility is going to eat our contract's value alive. Okay, now that we've mapped out our calculated, fully cash-secured risks for the week, let's zoom out to a macro-level cautionary tale about existential risk. Section 4, the dangers of leverage. This right here is the sobering timeline of Situational Awareness LP. They were a high-flying AI hedge fund managed by a former OpenAI researcher. And man, their ascent was legendary. They posted a jaw-dropping 439% return in the first half of the year, mostly driven by heavily concentrated 4x leveraged bullish bets on the AI supply chain. But then, the catalyst hit. A completely standard, temporary, midsummer AI correction hit the broader market. Because they were leveraged 4-to-1, that normal market dip triggered severe margin calls from their prime brokers. And the result? An absolutely devastating forced sale. Unable to meet those margin calls, their massive $16 billion public equity book was rapidly forced liquidated to Ken Griffin's Citadel at a steep discount. They were entirely wiped out. The fundamental danger of leverage isn't necessarily being wrong about the market. That's the crazy part. Situational awareness actually had the right long-term thesis on AI. But when you combine a correct thesis with high leverage, and then you just introduce everyday market volatility, it equals forced liquidation before your thesis even has a chance to recover. Without leverage, a 30% drop just means you hold your breath and wait for the market to bounce back. But with 4x leverage, a mere 25% temporary drawdown completely wipes out your equity. Your broker demands cash, and if you don't have it, they sell your assets at the absolute bottom. It perfectly echoes what the late, great Charlie Munger always said. Leverage is the only way a smart guy can go broke. If you're smart, you don't need it. If you're dumb, you shouldn't be using it. Leverage essentially strips you of your investment horizon. It transfers control from your own research straight to your broker. And even worse, it transfers all the upside of the eventual market rebound directly to the unleveraged, well-capitalized buyers, like Citadel, who just swoop in and buy your distressed assets for pennies on the dollar. It is a brutal wealth transfer. So as we face down a highly volatile earnings week for Palantir, SpaceX, Uber, and Circle, I really want you to ask yourself, will leverage dictate your timeline, or will you dictate your own? Are you controlling your risk, or is your risk controlling you? If you found this explainer helpful, please do me a huge favor and hit that like button. And make sure to subscribe to the Noob Selling Options channel so you can follow our transparent journey through the markets. Trade smart, stay cash secured out there, and I will see you guys in the next one.